So kind of a rough day for SoFi along with everything else in the market. Market down 2% today. SoFi was down, let's see, 5.72%. And so in the last video, I gave you a few different possibilities. I said we could bounce out of that demand zone, come up here, and then come down. I said that was the most likely possibility based on the fact that this right here looks to me like an ABC move. And so I said, there's no way that we're just going to go rip through here and make new highs. We got to come down here for a C wave lower. And that looks like what's going on right now. We had a plunge earlier in the week on Tuesday. We were at 17 bucks. Now we're at 14.67. So here's my current count down. I would say almost 100%. This is a impulse down. We have 1, 2. I think it's a nested move. So 1, 2, 1, 2, 3, ABC 4, 1, 2, 3, 4, 5 is what I see. So the third wave should be coming to an end maybe early Monday. And then I would expect a little bit of a bounce. And then I would expect one more move down. So are we going to make lower lows? I would say it's very, very likely based on the fact that this is a lower high compared to this. And this is the start of the A wave. This was a B wave. C wave should go lower. It doesn't have to, though. It's just what would make the most sense, but it doesn't have to. But again, based on my analysis of the 5 waves, I would say that it is going to make a lower low, and the fact that we have a gap down here at 14.10. So if I took a parallel line here from this down to the A wave, it actually says 1380 as a target. That would be about basically like a 5% move lower, 5-6% move lower. So that's what we're looking at, I think. I don't think that we're going to see anything like this. I don't think we're going to see an impulse down like this, unless the market crashes, obviously. Because, again, we're at the very bottom of the standard deviations. And so there isn't really that much more to go. If we make one more low, that should be it. I don't see us coming down here and breaking below 1362. If it did, that would take away one of the possibilities, which was the extension to the upside. But as it stands right now, there's still 2 possibilities. Same as last video. You have this is a 5th wave. You have A, B, C for a 6th wave. 7, 8, 9 up here. That would finish off wave 3, or we just make ABC down here, and then that's the A wave, and then we come back up here, maybe all the way up here, and then come down later, maybe in like April or something. This has lasted now for about a month, so I would expect if we do make a B wave, it would probably last another month or 2 to the upside, maybe all the way through March. And I would expect that gap to potentially be hit. If you look at the GEX here for next week, $17 actually has the highest GEX right now. But this is before today. It probably changed. I'll have to look tomorrow. But right now, going in today, 17 bucks was the highest GEX by over $1 million. And then I can show you like later. Look at 1/16, 2026, $20, and even $20 on 6/20. Right now, but that $10 put is still there as well. That doesn't really help that much right now, though, because you can see here, although this did finish where it should have finished, I guess, today, 14.50, right around there. The highest right now is 17 bucks. So maybe we go down the first like day or 2 of the market, and then we start moving higher. Or maybe this completely changes. Maybe this gets bigger. I'll have to look again on the next update, but we'll see. So that's kind of like, it's kind of helpful, but sometimes it doesn't tell you the whole picture. So I wanted to throw it out there, but we'll see how much it changes over the next couple of days. So again, I'm still like pretty bullish. Let's look at the moving averages. We're definitely going to have to hold this moving average right here, which is the 100-day at 1380. I don't want to see us finish below that, because if we finish below that, there's no support. Because you have the 20 on the weekly here, and then the rest of them are way down here. So we do not want to lose the 100-day on the daily, which is at 1380. If we finish below that on a daily basis, that would be really bearish. Then we'd likely come down here and break this low. I don't think we will break below this, but that could be the spot where we hit and bounce off of for the next move higher. So not terribly bearish right now, but below 1380, I would be bearish, probably. Although it is overextended on the standard deviations. So again, just one more time, I'll go over the scenarios from here. You have, if you haven't watched my videos before, we are in a third wave, potentially started a fourth wave, or we are in an extension. So we have 1, 2, 3, 4, 5, 6 on the ABC move, 7, 8, 9, and then that would be the third wave right there. And then we would start the fourth wave. Or we've already topped on the 5 waves here. The third wave is right here. And we are starting ABC down. We'd probably chop and go higher for a while, maybe into like end of March, and then drop one more time, potentially going all the way down here to 11 or 12 bucks. And then that would be the fourth wave. And then from there, we would go, my target would be somewhere above 30 bucks. So we still have a lot of upside regardless of what happens. And if we do the extension, then that just means the fourth wave is delayed. It's still probably going to be a long, drawn-out fourth wave. Personally, I think that I don't really care, I guess. Whatever. We can do the extension if we want. If it works out either way. Extend or make a fourth wave. The extension would probably only go up here to like 25 or 26 bucks. If we go down here and make a fourth wave, then we could run to 30 a lot quicker. Then come up here to 26 bucks. We have to go consolidate probably back down to like 15 to 20 bucks. So that's my thoughts right now. Those are the two long-term possibilities. I went over them in the last video as well. And in the short term, again, we're probably going to make a lower low compared to the February 12th low. We do not want to lose 1380. That's the 100-day moving average. But that looks very unlikely based on the fact that we're staying in between these parallel lines. And yeah, that's pretty much all there is to say about it right now. Last thing I'll say, you look at the standard deviations on like the 4-hour. We're getting to the very bottom of it. On the 2-hour, we're getting to the bottom of it. Hourly, bottom of it as well. And then the daily, we are already overextended the downside at -2 standard deviations. But the reason that I favor the fourth wave, I guess, is because of this. The weekly standard deviation is showing that we probably need more consolidation before we can make that move to 30 bucks. So I would favor the fourth wave, but I'm still watching to see if we can get that extension like that. All right, that's it for this video. Leave me a comment, like, subscribe for more updates, and I will update you early next week.